How do you check your business credit reports? More important, how do you know how to interpret what's on your business credit reports, including scores, so you know what to work on, what to improve, what to modify to help make your business credit reports pristine to radically increase your chances of getting approved for credit financing and to help you get approved for credit and financing at better terms? Well, that's all that we're going to be decoding today. By the end of this training, you're going to know about the three major credit reporting agencies. You're going to get an idea of what's on the reports, how some of their major scores work, even how to access your business credit reports. As a matter of fact, at the end of this training, I'm even going to help you get $250 worth of business credit reports at no cost with the three reporting agencies. We got a lot to cover, so let's dive in and get going. Remember, when we talk about business credit, we're talking about credit that's in a business name. It's linked to the business's EIN. It's not linked to the business owner's social. Business credit reports and scores reflect the likelihood that your business will pay its bills as agreed, not you individually. So I hear a lot of people ask me this question of how do I get away from personal guarantees? It's simple. Your business needs to prove that it can stand on its own and it has a reputation of paying its own bills as agreed. If you do that, then you start to get more and more opportunities to get credit, especially without a personal guarantee. But you're never going to get money without a personal guarantee unless it's like it's some kind of collateral-based financing. You're not going to get financing. You're not going to get credit. You're not going to get the stuff without a personal guarantee until this happens, until the business proves based on its business credit quality that it can stand on its own and pay its bills on time or early. So there's three major credit reporting agencies, D&B, which is short for Dun & Bradstreet, Equifax, and Experian. There's also FICO SPSS. They do offer a score in the business world, or FICO does, known as SPSS. And there are other ones as well, like one known as Credit Safe. So look, when we think about consumer credit, we think about Equifax, Experian, TransUnion. But the reality is there are thousands of regional credit bureaus. But what happens is they never get big enough for you to know because the big three eat them up. It's the exact same in the commercial world. There's a lot of commercial reporting agencies, very few as big as these three. And a lot of the regional or smaller type reporting agencies get bought up by the big three. The other ones outside of this that you just want to keep an eye on is FICO. Your small business score will be used for SBA loans. We've got training about that on YouTube. And you also want to keep an eye on Credit Safe, which we've got training on YouTube about Credit Safe as well, because they're an up and coming reporting agency. And we'll be talking more about them as they become bigger in the business United States. So business credit reports, a lot of options here. But basically you can kind of look at it on opposite ends of the spectrum. There's summary data, just data that gives you overview summaries of what's on your credit report. And then there are very detailed reports. And then there are, reports in between with, more scores than the basic ones, but not as much as the detailed reports, etc. And the difference here really is pricing. Depending on how much you want to pay for the reports, you can get some basic information, basic scores, or you can get, everything, really detailed look at what's on there. And we'll talk about the use of case of each of those type of different scenarios and when you might want detailed reports and when you might want basic reports through today's training. So if a highly detailed report really is in your budget, well, go for something in between or on the opposite end, the summary report. It usually is the cost. One credit report can cost hundreds of dollars if you get a really extensive detailed report, or you can get it with some bureaus like Equifax as cheap as $20 if you're just getting some summary data. So big difference between price points here, and price point in large part is going to control like what kind of reports and scores that you're really getting, and also your usage. Just what are you using the reports for? Summary data is great if you're just keeping a basic eye on your business credit reports. Detailed data is great if you've got discrepancies, negative items you're not sure about that you want to get fixed, or if you're really going all in on building business credit. We'll talk about the differences throughout today. Hey, if you don't mind, tell me where you're from. I always like saying hello to everybody as they come in. And the Handyman Toolbox is coming in from Atlanta. Thanks for tuning in. And KE, thank you for coming in and saying hello. I appreciate it. It's always great to see you. So, okay, and if just because you're watching, I'll throw this up as well. You are entitled to a free consultation with us. So if you'd like to talk more about your business credit reports, that's our phone number. I'm going to pull this down in just a minute so it's not put over the actual content of this. So Dun & Bradstreet, by far the biggest reporting agency, 350 million records on file, in case you're keeping track. And that's more than any credit reporting agency, consumer or commercial. So Dun & Bradstreet is the biggest credit reporting agency in the world, not just consumer versus commercial credit. They're bigger than everybody. TransUnion, Equifax, Experian. As a matter of fact, D&B has been around longer than any of them. So this is funny because a lot of business owners think that, business credit's fairly new because they don't know about it. But the reality is business credit reporting has been around. Dun & Bradstreet, the biggest credit reporting agency, has been around way before consumer credit even existed. So commercial credit has outdated consumer credit by like a decade plus. And that's one of the reasons that D&B has become one of the largest by far. So they have over 350 million records on file. 100 million of those are no longer business companies that are even business. They just keep them there for historic purposes. Okay. And to ensure accurate report as possible, D&B gives your companies current financial statements and actually takes those financial statements if you're willing to give it to them, and actually will assign that to a score, as we'll talk about here a little bit through this training. So 2 things you're going to need to get set up with Dun & Bradstreet. First, you got to get your DUNS number, and you can get this at creditsuite.com/DUNS, D-U-N-S. You can go online and Google free DUNS number, Dun & Bradstreet. It doesn't matter. We just got you a short link at creditsuite.com/DUNS. You don't even have to put the dash in. It just takes you right to D&B. It's a shortcut if you want to go that route. The DUNS number is 100% free to get. It's going to take you 10 or 15 minutes to process the application. Your business needs to be set up, your name, your address, your phone number, that you're going to use for your business moving forward needs to be set up before you get in there and get that. D&B will oftentimes try to call you and sell you something they call their credit builder, their credit monitoring platform. It's not something you need. It's $150 a month, $1,500 a year. So don't feel compelled to buy that. As a matter of fact, if you don't want to be sold by Dun & Bradstreet, never pick up their phone. Okay, Dun & Bradstreet's only ever going to call you to sell you their credit builder and credit monitor. That's it. So if you ever get a call from D&B, you're like, oh my gosh, D&B's calling me. Don't get excited. They're just calling to pitch you something. And they're going to say things like that you should pay them to expedite your DUNS number. But the reality is it comes in typically 1 to 3 weeks if you don't pay them a dime. They're going to say something like you need to pay them for their product to activate your credit profile. You don't need that either. All you have to do is get 3 trade lines. If you get 3 accounts that report to Dun & Bradstreet and have your DUNS number, they will activate your credit profile. You don't need to pay them $1,500 to do that. So just remember, you don't ever need to pay for their services. If they get you on the phone, they will try to sell you. And keep in mind, the 2 main things they're going to try to sell you on: getting your DUNS number. You get in 1 to 3 weeks anyways for free. And the activation of your credit profile happens automatically when you get 3 accounts reporting to them. So that's going to save you that $1,500 setup with D&B. Now, D&B has what's called predictive scoring models, and these basically just predict what may happen in the future. And this basically uses a lot of information, including your trade lines that report to D&B, your financial data, your utilization, the industry that you're in, collection, judgments, lawsuits, all that kind of stuff, public record data. All this is calculated in to multiple scores where they predict your likelihood of defaulting, of going out of business, amongst other things. Now, the D&B rating is one of these scores, and what it will do is take into account your financial data on top of what's called trade experiences, or trade experience. When you hear this, when you hear the term payment experience or trade experience, or trade line, they're all exactly the same verbiage that reflect the same thing. It's the reporting of an account to the reporting agency. So if I've got a payment experience with D&B, it just means that I got, for example, a Staples account, and Staples reports my payments to D&B. Now when it shows on my credit report, it's a payment experience. It's a trade experience. It's a trade line. The same terminology references the exact same thing, the reporting of that data to the reporting agency. So you can supply to D&B your financial data, and they're going to take that into account with your D&B rating. And they've got the crazy score from like 5A to HH. But you can see here, what's interesting is I say rating classifications show company size based on worth or equity. So what this means quite simply is this: if you don't give D&B your financials, they will then look at the number of employees you have to determine the financial health of the business. I don't understand it. I never have. It doesn't make sense to me how the number of employees you have reflects your financial health. But I guess it kind of does, right? If you're a one-man show, you're a one-man show. If you get 5 employees, you can kind of start to see that you're getting some revenue established, probably hundreds of thousands of dollars at that point. You start to get to 5 or 10 employees, you might even be surpassing the $1 million mark in some points. So that's basically what they're saying, is they're looking at financial health based on number of employees if they don't have your financials. So my advice here is, if your financials are good, if your tax returns are good and they show growth, even if they show a little bit of a loss, supply them to D&B. It's only going to help your rating. As a matter of fact, they put you in different buckets of the rating based on what information they have. Meaning, hey, we've got their financials. Hey, we don't have their financials, but we know the number of employees. Hey, we don't know either. We don't have their financials. We don't know the number of employees. Complete crapshoot. So they're going to put you in these different buckets or scales or categories based on the amount of information that they have. If you don't supply your financials to them, you just need to keep in mind that when you fill out your annual report with the Secretary of State and they ask you the number of employees you have, that's very important information. All the reporting agencies look at the number of employees you have to somewhat determine the financial health of your business. Whether we agree on that or not, it doesn't matter. It's just, I'm just here to tell you how the system works so you can manipulate. I don't mean illegally. I mean, like, if you understand how it works, then you can be able to get your credit profile and scores like the way you want them, because you can understand how the game is played, right? And by the way, not to get off on some tangent, but that's why I sit here and train you like this on a regular basis, is because they are playing a game that you do not understand. And if you now understand the rules, you understand where they get their data, you understand how you're scored, how you're looked at, how risk is assessed, what you can do to control all of that, then that gives you control, right? Now you know the rules of the game, and now you can start creating credit profiles, credit scores, structure of your business fundability in a way that's going to make you more lendable. Okay, hello, thanks for coming in. Pam is coming in from Ohio. Thanks for saying hello, Pam. LaRon Wells, Raw Transportation from Chattanooga is in the house. Thanks for the info. Thanks for coming in. Sam from Jacksonville is in the house here as well. And Veronica is coming in. Thanks for following quality information. Veronica, I love your Facebook picture. That's awesome there with the sunglasses on. And Terrence, thanks for coming in. Appreciate you saying hello as well. And again, tell me where you're from. Always like saying hello to everybody. And if you're getting value from this, if you're learning things you didn't know, hit the like button, hit the love button. If you're really getting value, then share this so we can help more people. So again, D&B's rating kind of works like this. Okay, it contains what's called a financial strength indicator. It's calculated using the net worth of the business, which they get from your tax returns, right? Then there's what's called a composition credit appraisal. And this number runs from 1 to 4, reflects D&B's overall rating of a business creditworthiness. 1 is high, 4 is limited. Okay, so it gives you some more insight of how that D&B rating is actually calculated. So a rating might look, for example, like 3A4, and that really has to do here with this that we're talking about, the composite credit appraisal. And if we go backwards, it also takes into account this 5A to HH scale, which basically this is what it's saying. Okay, it's a simple, it seems complicated, so let me make it as basic as I can, because it's confusing even the way I explain it. Okay, it comes down to this. There's 2 things. What information about you do they have? Remember, they put you in a different category or bucket based on whether or not they know the number of employees, they have your financials, or they don't have any of that. Based on those 3 things, they're going to put you in one bucket. Then based on the bucket, they come in and issue this, look at this financial strength indicator or composite credit appraisal to then determine your risk based on the information they have. So that way, like, it seems like 3A4 seems weird, but it's not. It's actually reflecting, hey, this is the information we have to make this decision. And based on the information we have, here's the credit worthiness basically of the business. Now, the Paydex score is the main score that we are familiar with the business credit reporting agencies. Okay, it shows 2 gauges, up to 24-month Paydex and up to 3-month Paydex. So when you look at a typical business credit report, you can kind of determine this. You can look at the short term, how they've paid their bills, 3 months. And we can look 24 months, over 2 years, to see how they've paid their bills, because we're going to need that information for different purposes. Like if I'm going to issue somebody a credit card, I'd like to know, like, historically how they paid their bills. But I'd also like to know, like, recently how they paid their bills to make sure that they're not in trouble. So the Paydex score has both of these, a short term and a long term, that you can look at. And basically the scores are the same. They're calculated the same. 100's the best score you can get. Okay, 1 is the lowest score you can get. 1 means that you're paying more than 120 days late. 100 means you can anticipate payments to come early. 80 means payments are prompt. I have if sometimes I stand on stages and pull this up, and I don't really do it very often, but it literally shows from 1 to 100 exactly what your score reflects with D&B. Meaning 1 is 120 days late. A 70 score means you're on average 30 days late. Okay, so literally I can tell on average how many days precisely you are late or early based on the exact score. So that just means your score reflects how you pay your bills. And that also means all you have to do here to get a good score is make sure you have accounts that report to D&B and then pay those accounts on time or early. It's very important. Remember, in the consumer world, we're not scored late until we're 30 days late. In the business world, 1 day late is 1 day late. It's called DBT, or days beyond terms. So 1 day beyond terms is actually hurting your scores. Then there's a financial stress score and a financial stress class, and it really goes from 1 to 5. And this basically just depicts your risk of closing your doors, ceasing operations, going bankrupt, basically shutting down your business. So all of the reporting agencies have similar names and variants of the scores. They have a Paydex of some sort that basically just reflects on average how you pay your bills. They have a rating of some sort that takes into account employees, size of business, financial data to depict the score. And then they have a financial stress score of some sort that reflects your likelihood of ceasing operations or closing your door. These scores all work very similar to each other across the 3 reporting agencies. So if you understand what I'm saying here, then you're going to understand the same thing with Equifax and Experian. Now, we also need to talk about percentiles, and we need to talk about comparison scores, because this is where industry becomes very important. When we see percentile, when we see comparison scores, what they're doing is they're basically comparing us to other people in our same industry. And so they're saying, hey, we're the top X percent of this industry. Hey, we are this compared to others in our industry. So the reason for this is, let's say that I'm comparing my company to all other companies that exist. Well, that's going to be tough, because restaurants, for example, have a very high risk of default, and they have a big track history of paying bills not as agreed, well over any other industry. But let's say I'm a lender that lends just to restaurants. I already know they're high risk. I already know that they have not a great history of paying bills as agreed. What I want to know is how much this restaurant I want to lend money to compares, and how they pay their bills compared to other restaurants. So it's kind of like you're not getting compared across everybody in all industries. You're getting compared against others in your own industry. So very problematic if the credit reporting agencies have the wrong NAICS code for you, the wrong industry code. And it's one of the reasons you really need to go to NAICS.com. You need to know what your NAICS code is. You need to make sure all loan applications, credit applications use that exact code and exact terminology of what your industry, what your NAICS really is. You need to update your taxes, make sure your taxes reflect your current industry, and you got to make sure that your credit reports are up to date here. Otherwise, these percentile scores and these comparison scores can really work against you if you're getting compared to other people that aren't even in your industry. Okay, so again, here's just exactly what I just said. It's a comparison to other businesses that basically are in the same industry. And so the financial stress national percentile reflects the relative ranking of a company among all scoreable companies in D&B's profile. And then, of course, they also have the score that this is the financial stress national percentile. Then we get into that comparison score, what we call or the comparison score, and that has to do with others in your actual industry. So remember, financial stress score, financial stress comparison is looking at people in your similar industry, and it's just depicting your risk of failing, of going out of business completely. Paydex yearly trend. Okay, we're going to see this on graphs on our commercial credit report. It's just reflecting how we've paid our bills on average over the last year. So when we see that, that's exactly what that means. And thanks everybody for coming in and saying hello. Quality information. I appreciate that. And Assista, hello, coming in from Queens, New York. I'm going to New York City for Thanksgiving. Maybe I'll see you there. I don't know. I've never seen Macy's Day Thanksgiving Day parade, and I'll be there. Eric is coming in from Detroit. What's up? Detroit's in the house. Thanks for tuning in. Appreciate that. And again, you can go to creditsuite.com/monitoring if you're interested in getting your business credit reports for only $24. I'm going to pull this up and keep this up on the screen so you have a cheap way to get your credit reports. That's the cheapest way you're going to get your credit reports anywhere. Okay, we are the cheapest because we buy them wholesale and we don't really mark them up. We just get them to you for pretty close to what we get them for. That way, it's very affordable for you to be able to monitor them. So I pulled this up on the screen. If you'd like to get your credit reports with D&B Equifax Experian, you can go to creditsuite.com/monitoring to get them. Okay, so D&B's credit monitoring. Well, you can get as of, and this is as of September 2021, costs about $39 a month to get D&B's credit monitoring, and that just looks at your scores and ratings. Okay, it also alerts you when things change, and it includes dark web monitoring as well. This isn't a full credit report with D&B. It's like a summary report that gives you a brief summary of your actual scores. Their actual credit builder is $150. That's what gives you access to all their reports, all their scores with detailed information. So as I mentioned before, you're going to kind of decide on monitoring mostly based on price point, what you may need the data for. If you just want basic information about D&B, it's $39 a month. If you want an overview of all the details and specific details at D&B, then it's $150 a month. You can choose, or again, you can go to creditsuite.com/monitoring, and it's only $24 a month, and you will get information on your D&B Paydex score, summary data, and detailed trade data through that as well. So we look at Experian. Experian also offers data and analytics to businesses to help them better assess risk. They also will look at commercial credit reports, and they sometimes will look at consumer credit reports as well. They have what's called a blended score, although it's not popular, and their main score is called Intelliscore Plus. Now, it also ranges from 0 to 100, with 100 being the best score you can get and 0 being the worst. Okay, this is the most commonly used score for credit cards. So if you want revolving credit like credit cards, you really got to build Experian, because this is what the major credit issuers mostly use. And again, a lot of financial institutions use these. 25 P&C insurers use these as well. 800 aggregates actually are calculated into the overall score. Okay, but basically, Intelliscore is just kind of similar to D&B. It's rating how likely you are to repay bills in the future. D&B's main score, Paydex, we talk about Intelliscore, Equifax as well. Their scores all look at the same thing, and what they're measuring is the exact same thing. They are measuring the likelihood, this is very important, the likelihood that you will go 90 days late over the next 12 months. That's exactly what they look at. How likely are you to go 90 days late over the next 12 months? Now, here's an interesting thing. When we look at consumer credit scores, your personal credit scores, they depict your likelihood of going 90 days late, very similar so far, over a 2-year time period. So commercial credit scores look at your risk of going late over 12 months, the next year. Commercial scores look at your risk of going late over the next year. Consumer scores depict your risk of going late over the next 2 years. Why is that important? It's way easier to fix and rebound from damaged business credit than it is consumer, because business credit's looking at a shorter period of time. So what happens, or depicting risk over a shorter period of time. So what happens is if we mess up on commercial, but we immediately fix it by getting more positive on there, our score will bounce back and recover way faster than it would with commercial scores. Just some little tip that can help you along the way here. Okay. Now, the score identifies the highest risk businesses by making use of payment public record data, severe delinquent payment, high utilization, tax liens, judgments, collections, industry, short-term, and business. Some interesting things here. D&B's Paydex is 100% based on your payment experiences. Experian score isn't. It's kind of like FICO on the consumer side, where like certain percentages of the score calculate into certain things. Now, they give you a range, not a certain percent. It's not like the consumer FICO score, 35% of your score is payment history, 30% is utilization, 15% is length of credit history, 10 is inquiries. I had a hard time getting that fourth one up there. And then the fifth one is credit mix, right? 35, 30, 15, 10, 10. Well, this doesn't work this way. They give kind of a range. They say, okay, 50 to 60% of the scores, how you pay your bills. And, 10 to 15% is the utilization. But what it comes down to with it is this. If you really look at Intelliscore, 85% of this score is based on how you pay your bills. No matter how they want to word it, 85% of it is how you pay your bills. The other 15% has to do with things like the industry that you're in, the public records that you may have, your utilization, for example. So those things are minor factors, but the main aspect of Intelliscore really has to do with how you pay your bills, the same as all of them do. And George is in the house, and Blessed One says, I needed this. So I'm glad you were able to come in today and get this information. Okay, so the financial stability risk score. Here we go. Like I said, each bureau has its own variant of this. It shows a 1 to 100% percentile score plus a 1 to 5 risk class. The risk class puts businesses into risk categories. The highest risk is in the lowest 10% of accounts. So a score of 66 to 100 and a risk class of 1 means a low risk of default or bankruptcy, but a score of 1 to 3 and a risk class of 5 means a high risk of default or bankruptcy. Look, you don't need to memorize this. When you look at Experian's commercial credit report, it will tell you right under the score, your high risk, your low risk, based on the class and the score that you have. So you don't need to memorize this, but I like to give you a little bit of deeper insight into how these things work. And on the actual credit reports, it will come in and tell you basically the class that you're in and the actual score and how you rank. Now, Experian offers monitoring services. And again, the prices are going to change, but their business credit advantage is $89 a year. And you can monitor credit for 1 year, alerts of changes. So basic summary, right? Then you can get a business credit score pro account for $2,000 a year, basically, that has trade line details on there, or $1,500 a year in summary form only. They have a Profile Plus for a single report for $50, and they have a credit score report that just gives you your credit scores for $40. Like I said, if you want credit monitoring for only $24, go to creditsuite.com/monitoring. I'm not trying to sell you some product I make a bunch of money on. The reason that we got this and partnered with NAV to get the lowest cost credit reports that exist in the world is just because we wanted to make sure everybody could get them. If you look at these prices to get regular reports and scores from the Bureau, it adds up to $250. That's what it cost. Well, we wanted to make sure you have access to them for $24, 90% cheaper than that, because then it's easy for you to get. Like, it's easy for you to get, keep them, and monitor your reports and regularly. It's so important, which is why we do that. But here's a look at the prices of these. And again, creditsuite.com/monitoring is just 90% cheaper, so you know. Now, just one report, including nearly everything Experian offers, is what they call the Business Credit Advantage subscription plan. Business credit score, financial stability risk score, collections, trade data. You can get 30 reports per month, alerts, dispute resolution, 3-month score tracking, unlimited access to your report, business identity monitoring as well. Okay, it has UCC deal. Okay, let's go back. I'm going to explain some of the stuff as I go. Okay, so dispute resolution. If you're going to dispute negative items with Dun & Bradstreet, it's 100% free. You can do it through something they call their dashboard without ever getting their credit monitoring. If you want to dispute through Experian or Equifax, you need at least their basic credit monitoring to dispute through their online system, which is the best way to dispute with them. If you have damaged business credit, go to youtube.com/credit suite, and you can easily just search fixed business credit, and you'll find our training that details specifically how to fix these business credit reports. Now, UCC filings. A UCC filing is when you get a loan with a bank and the bank puts something on your credit report notifying other lenders that you have a loan with them. That's what a UCC filing is. It isn't good. It isn't bad. It doesn't calculate it in your score. It just tells lenders that you have an outstanding loan. So when you see UCC filing, that's exactly what that is. And that is $1,500 annually for this the Score Pro subscription plan with everything we just talked about. Now, they also have a Profile Plus report, and that has everything we just talked about, plus trade payment detail, inquiry detail, UCC detail, corporate financial information. It doesn't just have the basics. It has all the details on this as well. Okay. And you're getting everything else that's covered with that Credit Pro subscription plan as well. So this is another option that you have. Again, how we've talked about. It comes down to this. How much you pay and what kind of reports and scores you get just depends on what level of information you want. creditsuite.com/monitoring. We partnered with NAV, and basically what it'll show is DNB's Paydex, Experian Intelliscore, shows Equifax's main score as well, shows summary data, your NAICS code data. It shows all of your trade line data as well, all your payment experiences, all that information is there. Everything you need to monitor and build business credit is at creditsuite.com/monitoring. But if somebody asks me, when should I get one of these detailed reports? My answer is always the same. You want to get a detailed report typically if something's wrong. Like if something's wrong on Experian's report and you need to fix it, then I would upgrade and get credit monitoring with them. I wouldn't get, the $2,000 a year. I get the cheapest plan I can that shows my payment experiences, because then I can dispute it with them. But if I'm not disputing with them directly and I know I need a dispute, I'm not even paying for this because I don't need any of this junk to build business credit. I don't. But you may want this data on another business. You may want it on a competitor. You may want it on somebody you're going to lend money to. You're going to extend terms to, right? So if you're willing to let your customers pay you on terms, you may want to be accessing these credit reports to make decisions on whether you should extend credit to your customers. So we don't ever want to forget that these reports and scores are, yes, they're how lenders, credit issuers perceive you, but they're also can be used by you to judge other businesses, whether it be competitors you just want to snoop on, or whether it be, people that you want to extend terms on. So never forget, when you're learning this, it really works both ways, and the data can really work for you both ways as well. So it's something to consider. And Sister says, my credit score with DNB disappeared during COVID, been paying on time, anything I can do? Well, okay, so this is a really good question, a really good inquiry. First of all, one thing that can make your credit profile poof, disappear like it never even existed, not what you're describing here, but one thing that can help make that disappear poof gone is if you ever try to buy trade lines or get a shelf corporation. If you try to beat the system and cheat the system by buying shelf corps or trade lines, that will poof, credit profile gone, shut down. You never get it back. You only start a new business to get a new credit profile. But in a case like this, where the score disappears, what that typically means is that one of the 3 accounts that was reporting to DNB has become old enough where it's either no longer reporting or it's too old to be calculated into the score. So remember, in order to have a Paydex score with DNB, 2 things have to happen. You've got to have a DUNS number, which doesn't go away once you get it. So more than likely, that's not what happened here. And you have to have 3 accounts reporting to them. So what you're saying here reflects that somebody either stopped reporting to them or one of the accounts got so old that it's no longer calculated in. All you have to do to fix this is just get some more accounts that report to DNB, and that will absolutely fix that with you. Christine is in the house since I was starting building credit. So I love Christine. Christine is one of my absolute favorite clients here at Credit Suite. And Christine is somebody that I think has secured well over $1 million in business credit. And if you want to know how Christine did it, all you have to do is go to youtube.com/Credit Suite. Just type in Christine, and you'll see about an hour-and-a-half webinar that her and I did walking through her results. And this was like when she was about $500,000 into the process, and every single thing she did to get the results from her perspective. Really cool, really powerful. Christine, I miss you. It's good seeing you. Thanks for coming on today. So again, make sure you check out Christine's process as well, because if you want to see how somebody gets to $1 million in business credit, she's the one to look at, and you can go right on YouTube and check that out. So also, let's dive into Equifax. Equifax gets its data from what's called the Small Business Financial Exchange. It's a third-party data aggregator that's owned by banks, where banks openly share their data amongst each other. Equifax, DNB, Experian, and LexisNexis are all vendors of SBFE, and they all take data from these banks, and it appears on reports. It's one of the places they get it from. They also get credit information and a wide variety of other places as well, including public record, utility data, all this other stuff. As a matter of fact, I don't know why I just put this on the Equifax slide. If you just took a snapshot of this really quick, this is really a summary of where they all get their data. They get their data from people that report to them, suppliers, utility companies, public records as well. And a lot of the public record data even comes from LexisNexis. So this is where a lot of the bureaus are actually getting their data. They have a credit risk score, 101 to 992. Higher numbers are better. And this section of the credit report also has key factors like the size of your business, public records, summary data as well. They have a payment index. Score runs from 0 to 100. Higher numbers better. Okay, it also shows the industry mean. Again, we're seeing this industry come up again. Industry is really important. You got to have the NAICS right. If you have the wrong NAICS, then you're being judged against people in the wrong industry. It can really work against you. So when you look at these commercial credit reports, you're going to see that it's got an industry median. It tells you where you are, what your score is, and where you rank amongst other businesses. Here we are again. We see a business failure score. No reason it runs from 1,000 to 1,880. That's just ridiculous, but that's the range of the score. And again, it takes into account balance information, inquiries, a lot of that stuff as well. When it comes to credit monitoring, you can get a single report for about $100 with them. You can order a business credit report multi-pack, 5 for the price of 4 for about $400. Again, you do that because you want credit reports on other businesses. Equifax has really pulled away from credit monitoring. It's just not as easily accessible as it once was. But again, fairly cheap. You can get their bottom level plan for only like $20. It's pretty cheap. Okay, now Equifax is commonly used by banks. So Dun & Bradstreet is used by a lot of companies, including insurance providers. Experian's very popular with revolving credit, like credit lines and credit cards. Equifax is very popular with banks. A lot of banks issuing loans will pull Equifax business credit reports. So how do you improve business credit reports? We got to make sure vendors are reporting your payments. Look, it's estimated that less than 10% of vendors actually report payments to the business credit reporting agencies. That means whoever you're paying that's giving you terms, 1 out of 10 of them maybe reports and 9 out of 10 don't. So a lot of people that you may think you have credit because they've given you credit, they're not reporting it. So you want to check with any vendor that's extended you credit to see if they're reporting to the reporting agencies. And if there's not, there's nothing you could do about it. They have to get the ability to report themselves to the reporting agencies. It's not an easy process to do. But again, you need to get credit with credit issuers that are reporting those payments. Okay. You also need to make sure you always pay your bills on time or early. I can show you all these different scores. I can show you all these different ranges. I can show you all this fancy stuff that's calculated into them. But here's the main thing. You need to get as many accounts reported to these guys as you can, and you need to pay every single one of those bills on time or early. If you do that, like I've seen Christina in many cases, you've got a score that's well above the average, a really good score that reflects you pay your bills on time or early. So you always want to do this. This is one thing that's calculated into every one of the scores, and it's the main driver of every score. So the one thing you need to do is get accounts that report and pay them on time. It's actually 2 things. Get accounts that report and pay them on time. Okay, and pay them in full. Things like Experian Intelliscore will take into account whether you're carrying balances or not. This isn't as big of a deal as getting accounts that report and paying them on time. But if you can pay them off every month, do so. For Experian in particular, try to maintain a balance about 20 to 30% of your limits. Remember, Equifax and D&B's main scores just look at how you pay your bills. They don't calculate anything else in besides payment experiences. But Experian, remember, as we talked about, part of your score does have to do with other factors like utilization. And if you want to maximize that part of the score, keep your balances as low as you can, but definitely less than 30% of your limits. Don't close positive accounts, and use your accounts at least once every 2 years. If you don't use it once every 2 years, it's not going to get calculated into your score. And we just saw this happen with somebody on here where they came in and they said, hey, why isn't my credit reporting to D&B anymore? Well, more than likely, one became too old to be calculated into the score, and that's in large part what happens. Okay, and you also want to try to avoid derogatories like liens, judgments, even lawsuits. We're not used to this, but look, what happens is lawsuits do show on business credit reports. So liens, collections, judgments, lawsuits, you got to avoid all that stuff or it can all reflect negatively on your business credit reports. Okay, and again, credit monitoring can be expensive. It can easily be about $250 a month for the basic reports for all 3 reporting agencies. You can go to creditsuite.com/monitoring, and it's only $24 to be able to then come in and be able to get your credit reports. Let me see if I can pull that up on the screen really quick. I don't necessarily see that. But again, you can go to creditsuite.com /monitoring to get that. So to recap, in general, the most important parts of your business credit report include your scores that you're going to see, data like public records, information on how quickly you pay your bills, what we call DBT. You've got to improve credit by paying your bills on time or early, and reports can be expensive. So remember, creditsuite.com/monitoring, you can get them for only $24. Next time, we're talking about merchant cash advances, what they are, how they work, how to get them, including how to get funding with bad credit and get funded in less than 72 hours. Pretty good topic, I think, to dive into. We'll be covering it next time we meet. And if you're interested in talking to us before then, give us a call. I'll tell you some really cool stuff. When you give us a call, we're going to get your business credit reports for free for you, no cost. Saves you $250. We'll give you tips and tactics to improve them and build them. We'll do a fundability assessment as well, and we'll talk about all the things you should fix to become more fundable, to be more appealing to lenders. And if it looks like you qualify for funding, we'll even talk about all the financing you can qualify for. There's two ways to get it. You can go to you can give us a call at 877-600-2487, or you can go to creditsuite.com/consult and schedule online there. And if you got value from this, well, make sure you like and subscribe, because this is the kind of stuff that we regularly have on our social channels. We currently have thousands of videos on YouTube that can help, daily tips on Instagram, Twitter, and Facebook, 1-minute videos on Insta stories and TikTok, and a podcast on iTunes, amongst other sources like iHeartRadio. You can access all of our social links at the top right of our page, creditsuite.com. You know what the cool thing is? It takes you about 47 seconds. Time it. Try test me. 47 seconds to go to creditsuite.com, top right of the page, pull up each one of our channels and subscribe. That's it, 47 seconds. And you get access to all this kind of information regularly, whether it be a 30, 45-minute presentation or whether it be 1-minute tips that will help you along the way. Almost all of our information is dedicated to one thing, which is helping you get money. So make sure you check out our links. And Angel says, wonder if Amazon, yes, Amazon I think does. DMB is who they report to. Eric says, hey, is having a Verizon mobile business service, does it report to the business credit reporting agency? Verizon doesn't report to the reporting agencies, but they will give you credit, or they will issue you credit and open accounts for you based on business credit quality. So they are a non-reporting account, but they will, here, I'll actually show you this real quick. So they actually are a non-reporting account, but they will give you a credit line based on your business credit quality. So we actually categorize them as such. We kind of put them, and I'll give you a little bit of a look at this, my password here. So if you look at our business finance suite, this is how our clients like Christine build business credit. And this is how like people like Christine get to over $1 million of business credit, because they follow a step-by-step tiered system. But as you can see here, we really break down accounts based on who they report to, what it takes to get approved, whether or not you meet the qualification to get approved. So our clients can just come in and get approved. They don't have to apply and get denied, know what accounts to apply for in what order. We map it all out. And you can see that a lot of these accounts that have been asked about here are right here. We call them non-reporting trades. And these are accounts, these are all credit issuers who will give you credit based on business credit quality, like United, Chase, but they don't report the credit to the business credit reporting agencies. So there's a ton of these sources out there that will give you credit when you have none, and they report the credit, but they don't report the credit to the business credit reporting agencies. There's Navy Federal Credit Union, there's John Deere. There as well, Best Buy's in this bucket, Wells Fargo's in this bucket, Newegg, Apple. So some really valuable sources, right? I mean, it helps us to get credit with Apple or UPS, even if it doesn't report. So again, when we look at phone services like Verizon, T-Mobile, they fall into this category as well of credit issuers who don't report the credit that they give you, but will give you approvals based on business credit quality. Okay. So it's like a trade line is what Eric says. Yeah. I mean, it's not a trade line because it doesn't report on your business credit reports. It won't help you build business credit. But if you build business credit with other accounts that do report and get other trade lines, Verizon will give you approvals, like stupid approvals. Like we see thousands of dollars a week or per line that they'll actually approve you for. So they don't report as a trade line, but they will give you credit when you have none. So some things to keep in mind there as well. Okay, I'm going to go ahead and wrap this up. Hopefully this provides you some value and gives you some insight on what happens with your credit reports, how they work, and what you could do to control them. Make sure you like and subscribe on our channels, and I look forward to seeing you on our next training where we talk about cash flow financing. We talk about merchant cash advances and how to get approved quickly for funding, even if you have credit issues. Look forward to seeing you on that training. Until then, have a great day And I look forward to seeing you next time where we talk about more cool ways to get money to start and grow your business. And one thing before I wrap up, George says, hey, Ty, can you put this link to see the conversation with you and Christina in the chat? If you could do that, Keith, I think, Keith, you're there. We will go to this video and drop this in the chat so you can have that. Also, all you ever have to do is go to youtube.com/credit suite. Just type in Christine and that will pull up, and I'll have our team put that in the chat as well. And Eric says, so I got it anyway. Okay. Yeah, you did get it. That's great. If you got Verizon, still a good account to have. You can also use it as a reference, a trade reference as well. And he says, how do I get alerted about these live streams? All you have to do is go to YouTube and subscribe. Beside the subscribe button, there's a bell. If you click on the bell and click like always or all, then you will get notified when we go live, and you'll get notified when we release new video content, which is a few times a week. And that's all you have to do is click beside the bell, click, and then select all, and then that'll get notifications to you on a regular basis. Thanks, everybody, for tuning in. I appreciate you all saying hello and visiting throughout. I look forward to seeing you on our next training where we talk about more cool ways to get money to start and grow your business.